Joining us now here on set, outside our studios here in London, Daniel Lacalle, who is a chief economist at Tressis. Daniel, welcome to the programme. Thanks for joining us in the cold as we build up our coverage.
Beautiful morning.
Beautiful morning. At least the sun's shining. As we build up our coverage ahead of the UK election, of course. Let's not talk about the UK first. We'll come to that conversation shortly. Let's talk about the global picture for equities and for other assets, and in particular the trade narrative. Peter Navarro advises the White House, saying he's got no indication as to whether trade tariffs will be imposed on extra Chinese imports on December 15th. How much of a preoccupation is that for you at the moment?
Well, I'm not particularly worried about the phase one trade deal. I'm actually worried about phase two, because a phase one trade deal is not that difficult. It's basically going back to where we were a few months ago. I think that the challenge is whether there can be a meaningful trade deal that will change the trend of global trade growth, which is actually very, very poor. And there is uncertainty into this approval, and there is definitely the possibility that the US introduces some of these tariffs on the 15th of December, particularly because it looks like China is happy to do a trade deal, but we're not very sure about what they want to sign. So it's actually quite complicated.
So if you think, and if investors generally think phase one, well, it just takes us back to where we've been recently, it's not that difficult to achieve. Anything that makes it more difficult to achieve or more unlikely will be taken very badly by markets, perhaps. And I know our question of the day has been asking what kind of market reaction we'll see to news about the trade tariffs on December 15th. I mean, the downside could be quite drastic, could it?
The downside is important, particularly because we already had the Christmas rally in November based and predicated on the idea that there was absolutely no question about a trade deal happening. And there is too much optimism around it, and particularly about the idea that it has to be done quickly and at almost at any cost by the two parties, which is an idea that it's almost impossible to think about in reality, because there's no incentive either from the US administration or from the Chinese administration to reach a deal that they don't feel comfortable with. So I'm extremely concerned about this excessive optimism that was built in November that can lead to a drastic reaction in December.
Okay, Matt, jump in.
Well, Daniel, I wonder, is there an opportunity for European companies to build a stronger relationship with, in terms of Asian trade amidst the U.S.-China trade war, or is global trade simply too internationally linked to allow that kind of advantage?
There is an opportunity, but it's not that big. And I think that if you look at the big exporters in the Eurozone, they already have very strong ties with China, and it's a very important market for them, the auto sector in Germany, etc. So I think it's there can be opportunities in technology, there can be some opportunities in consumer goods, but not a lot, not a lot. I think that the challenge for the Eurozone exporters is that most of them are in not the autos, but the rest of the vast majority of the Eurozone exporters are in the mid to lower end of the added value chain, and therefore they suffer the most from a slowdown in global trade, and I think that is likely to persist.
I'm just trying to find out if there are any winners. You know, if we have no phase one, or as you mentioned, more importantly, no phase two trade deal, as is fairly likely, what should investors do?
Well, I think that if you stay away from the more cyclical side of the equity market, from the from the stocks that are very exposed to an improvement in macro data and a change in the trend of global trade growth, I think that there are great opportunities. And if you think about it, technology is a sector that is going to be a winner no matter what happens with the trade deal. I think that you can have, you need to be probably on the safer side, on the more defensive side, but there are good companies out there that will, I wouldn't say win. I don't think that anybody wins from a trade dispute, but I would say that they can strengthen their position because of a high added value and high margin exposure to their products.